Here we are. Welcome to the VARTA AG call. We just published first quarter results, and we published as well on top the first client contract with the e-mobility segment. The contract partner is a manufacturer in the south of Germany. And those two topics I will give further insights during the next 5 minutes. When we look into the group performed well. We had organic growth of nearly 3%, and the adjusted Ebitda performed much better. So we had an increase of nearly 16%, close to 60 million, how it came in. We report on two segments. That's the lithium-ion solutions and Microbatteries segment and the household batteries. The first segment, it's more OEM driven, and the healthcare hearing aid batteries is included. They performed pretty well with nearly 3% organic growth as on the same level on the group level. So segment household batteries, you know those batteries is a AA, AAA, very much consumer driven, performed well, and we have the energy storage systems where the revenues nearly doubled. So I would say we're very satisfied with the performance over there. And then there is the large cells that we call that 21700 or V for drive. So cell is much larger. It is for power packs usage, and it is as well for e-mobility. And as announced, we got the first client contract, and we expect first revenues at the end of 2023, early 2024. The pilot production line is on schedule, so we are very optimistic about this new product. If we dig deeper into the performance of the first quarter, you see on the right-hand side where we came from. We improved significantly our margin, coming from 26% the first quarter last year, going to 29%. So I would say that is what we expected. Both segments performed well, and we announced first-time dividend payments totaling of around 100 million, and that comes down per share to 2.84 euros. It's the first dividend payments. We still need the approval from the AGM from the 7th of June, but I think everybody will happy to sign in. Then it comes to the question how you finance your, I would say, capacity increase, the dividend payments, and the future growth with a large format cell. And if you look from the right to the left, then you see that we have a relatively low net debt position with 63 million currently. So if we increase that to a level of 2 times net debt to EBITDA, that will bring us 450 million. On top, the cash flow from ongoing business activities, more than 200 million. So all in all, we can gain 600 million euros out of that. Besides, we have, I would say, a strong equity ratio of 48% nearly. This gives us headroom. So we can easily finance our investments, which are expected in the range of 150 to 200 million this year, and the dividend payments, which will cost us 100 million pay out in the middle of that year. All in all, we are satisfied with first quarter. We are, I would say, in line what we gave to the market since mid of November last year. All segments continue to contribute to the growth and to the performance. We see that the high power lithium-ion round cell is gaining ground. There is high customer interest. When you look into the, I would say, the TWS batteries, they will get a stronger momentum in the second half of the year. So we have contracts up and running, which will kick in the second half. So there will be a positive revenue and profitability impact coming from the second half. First production in line is on schedule, and this, in short, is how VARTA is performing and what's coming up. Thank you.
Hi there, since you watched this company video until the end, I'm guessing you liked the video. And that's probably because we work very hard to create the most engaging and added value content for you. If you're a company and want to find out how we, at Seat 11A, can make a company video with and about you, please email us at content@seat11a.com.